Well, hello and welcome to Women of Color Money and Legacy, where I talk money matters. I share strategies to empower us to become financially literate in terms of managing our money wisely, making important financial decisions, building generational wealth, and creating a lasting legacy. It is a journey of learning and growing together. And if you've watched my channel over the past couple of months, you know that one of my primary focuses has been on encouraging us as women of color, particularly Black women, to invest in the stock market. And as I've noted on several occasions, investing in the stock market is the primary means of building wealth, and Black people are lagging behind all other groups. I've cited a 2019 Federal Reserve Board report that the average value of stocks owned by Black Americans amounted to only $14,000, nearly a quarter of what their white peers held. Again, I'm here to sound the alarm that we've got to do our part in closing this wealth gap in America, which has gotten even wider during the pandemic. And investing in the stock market is critical to that end. Now, if your employer offers a 401k plan, I strongly encourage you to participate. Many companies will match all or at least part of your contribution, so please take advantage of this free money. Now, if you work for a company that doesn't offer a 401k plan, or perhaps you're self-employed like myself, you can set up a brokerage account and invest in the stock market. Today, I want to give you an overview of the stock market because, in my opinion, most Black people who don't invest in the stock market simply hasn't been exposed to it, or it's a mystery, or it's something to fear. So for many of you, this will be an introduction to the stock market. And next week, we'll take the next step and where I'll do a review of some of the most popular online brokerage platforms for trading stocks. Now, let's jump into the topic for today. I want you to think about the stock market as a shopping district with several malls. And if you live in the Atlanta area where I reside, there's the Lenox Square Mall, Phipps Plaza Mall, and Buckhead Village Mall included in the shopping district. And the mall is the marketplace where you go in and you buy merchandise. You buy at Macy's, Bloomingdale's, Saks Fifth Avenue, Louis Vuitton, you get the picture. Now, the stock market is a collection of stock exchanges. The stock exchange is the marketplace that brings together buyers and sellers to facilitate investment in stock. Now, in the United States, there are 13 different stock exchanges, but the two major ones are the New York Stock Exchange, which is the largest stock exchange in the world, and the National Association of Securities, often referred to as NASDAQ, which is the second largest stock exchange in the world. And like the shopping centers, the stock exchanges are the marketplace where investors go to buy and sell stock. Now, I hope you're still with me. Now, buying stock represents buying a share of ownership in a particular company. You might like Nike or Apple or Tesla, and you decide that you want some ownership in these companies. So you buy shares of the stock. Whatever the share price is, you get to purchase the number of shares you want at that share price. And you can decide how many shares you want to buy. Now, once you buy those shares of stock, you can hold or sell your shares of that company. You typically want to hold the stock until the price increases, then sell it and make a profit. You don't have to sell all of your shares at one time. You can sell as many shares or a few shares as you want. That's what the stock market is about, buying and selling for profit. And that profit is called a capital gain, on which you must pay Uncle Sam a capital gains tax on any profits that you make. Now, let's take a look at these two stock exchanges. You see them here on the screen. The New York Stock Exchange at the top is by far the largest in the world based upon market capitalization. It is located in the financial district in Lower Manhattan at the corner of Wall Street and Broad Street. Now, the New York Stock Exchange was established in 1792, 230 years ago. So there must be something to it if it's still going strong after 230 years. And it lists over 2,400 of the world's best companies as of June 2022. And its list includes some of the oldest blue chip companies such as Ford, Coca-Cola, Walt Disney, JP Morgan, McDonald's, and Berkshire Hathaway, which is owned by Warren Buffett. Now below you see the NASDAQ stock exchange, which is the second largest in the world based upon market capitalization. It's also located in New York in Times Square, about 4 miles north of the New York Stock Exchange at the corner of 43rd and Broadway. NASDAQ was established in 1971, and it lists over 3,600 companies as of March 2022. And its lists include the largest tech companies such as Microsoft, Apple, Google, Facebook, now called Meta, Amazon, Tesla, and Intel. The easiest way to figure out which stock exchange a company is listed on is by looking at the number of letters in the ticker symbol that is assigned to that company. Typically, companies trading on the New York Stock Exchange have a ticker symbol that is 1, 2, or 3 letters. Examples: Ford, ticker symbol F; Coca-Cola, ticker symbol KO; and JP Morgan, ticker symbol JPM. Now, companies listed on NASDAQ have 4 ticker symbols. Example: Apple, AAPL; Microsoft, MSFT; and Costco, COST. When a US-based company transitions from being a private company to a public company, they debut their IPO, which is initial public offering, on one of these stock exchanges. Generally speaking, tech stocks tend to go public on NASDAQ. And every day, both of these exchanges have a bell ringing ceremony to signify the open and close of the market. The markets open at 9:30 a.m. Eastern Time and close at 4 p.m. Eastern Time. Now, it is possible to do after hours trading, and we'll talk about that more next week. Now, these next 2 images captures the trading floor of each of these stock exchanges. This is where the buying and selling takes place. You're inside the mall now. These are obviously after-hour photos because there's a lot of human activity that goes on during trading hours. Now, over 85% of trading takes place electronically, not physically here on the trading floor. Obviously, when you and I buy stock, we do it on our electronic devices, on our phone or our computer, because it's faster and it's anonymous. And some people use a third-party broker. Now, I'm encouraging you to do your own trading rather than going through a broker. I want you to learn to invest for yourself because it's easier. By the time you get to a broker, the price of the stock may have ratcheted up 10 points and you missed out. Learn the stock market and invest for yourself. It's not complicated. Now, every evening when you watch your local or national news, you will hear something to this effect: the Dow Jones finished up 100 points, or the S&P 500 closed the day 200 points down. Now, the Dow and S&P are not stock exchanges. They are indexes that track some of the largest companies in America, irregardless of which exchange they're listed on. An index is simply a portfolio that includes a segment of the market. And indexes are important because they give us a statistical analysis of the changes that are going on in the marketplace. They give us insight into the economy, what sectors of the market are performing better or worse than the other, market trends for diversification, and performance indicators that help investors measure their risks and returns. There are thousands of stock market indexes out there, but 4 that you will commonly hear about. And let's take a look at these 4. Dow is short for Dow Jones Industrial Average, and it is an index that tracks the performance of 30 prominent companies listed on the stock exchange. S&P is short for Standard & Poor's, and it is an index that tracks the performance of 500 large companies on the stock exchange. The third index I want to mention is Russell 3000. It's a benchmark of the entire stock market. It measures the performance of 3,000 companies weighted by the total market value of outstanding shares, okay? The 4th most common index is NASDAQ Composite. And unlike the other 3 that are not exchange specific, the NASDAQ Composite Index includes almost all stocks listed on the NASDAQ Stock Exchange. Now, you can go and Google search if you want to know what specific stocks are included in all of these indexes. And when it comes to investing in the stock market, people will tend to try to differentiate between an investor and a trader. And I don't want you to get confused by this technology because they are often used interchangeably. Let me explain. When someone specifically says, I am an investor and not a trader, what they mean is that they have a long-term strategy. They're going to hold that stock for a long period of time. It might be 5 years, 20 years, or 40 years, or whatever the case may be. And when you're building generational wealth, your target date will typically be out in the distant future, of course. Now, on the other hand, when someone specifically refers to themselves as a trader, they have a short-term approach. They plan to only hold that stock for a short period of time, a day or a week, a month, no more than 2 years. They want to cash in and take the profit sooner rather than later. And they might need the money to buy a house or their children's tuition or whatever the case may be. They plan to be in and out in a short period of time. And I would dare to say that most experienced investors do both long-term and short-term trading. And in a general sense, the two words are used interchangeably. I just want you to understand the context and not be confused by it. Now, as a new investor, I encourage long-term investing because I hope becoming financially successful and leaving a legacy for your family is a priority for you. As I prepare to wrap up, I hope this information has cleared up some of the mystery and trepidation that some of you may have about investing in the stock market. Believe me, I understand the fear given the history of financial institutions and discrimination. That's why I advocate investing for yourself and not letting someone invest for you. Knowledge is power that can change your circumstances. The stock market is the most powerful vehicle for growing your money and building generational wealth. Nowhere else can you get the compounded interest and rate of return from any other financial instrument. Money market funds and savings account don't yield enough to even buy you a decent meal over the course of a year. With a savings account, you'll be lucky enough to get 0.5% and no more than 3% in a money market fund. So there you have it, an introduction and overview of the stock market. Next week, I'll review some of the most popular online trading platforms or brokerage accounts that you can open to invest electronically. Thank you so much for staying until the end. Please like, share, comment, and subscribe to the channel. Click that notification bell to receive an alert each time I upload a new video. Take care, and I'll talk to you soon.